Hello everyone. Last week I had given a call in the Nifty by using the put ratio backspread strategy. We booked a profit of 10,000 rupees. We had a brief discussion about the strategy and what was the thought process behind the strategy and at what levels I had initiated the trade and what was the historical volatility of the Nifty. If you had followed my call, I'm sure you would have ended in the profit of 10,000 rupees. So the question is, how Nifty is going to be on coming week? Is it going to be a bullish or bearish, or it's going to be a range market? So what type of option strategy we can opt for this week? And what is the historical volatility of the Nifty? I'm going to answer for all your questions. So before that, if you're just new to this channel, I would ask you to watch the entire video and leave your feedback in the comment section. If you like the video, please go on, click the thumbs up button, and please don't forget to subscribe this channel. My name is Shiva Gurunathan. I'm going to with you for next 15 minutes. Welcome back to D Street School. First, we will go and find the support and resistance levels of the Nifty. As we know, Nifty last close is 17,853. So when compared to the last week, Nifty ended in the bullish mode. The immediate support levels we found at the 17,800 level and 17,700 and followed by 17,500 levels. So these are the levels. It act like a support zones. When prices comes to at these levels, you can customize your trade according to that, especially if you're a day trader. So we can also find immediate resistance at the level of 17,900, 18,000 and followed by 18,500. 17,900 and 18,000 is act like a resistance zone. So these are the very important support and resistance levels of the Nifty. So please make a note of it. That will be very helpful to customize your trade for upcoming week. So followed by support and resistance. Next, we will go and see the historical volatility of the Nifty. So Nifty, the last close would be 17,850. So this is the historical volatility level of the Nifty for next 4 days. So R1, R2 and S1, S2, this is not a typical support and resistance level. Actually, this is a standard deviation. So R1 and S1 is a standard deviation 1 and R2, S2 is a standard deviation 2. So before I will go and explain briefly about this level. So I want to let you know about, so volatility level is a statistical concept. So if you want to have a deep understanding about this volatility, I made a separate video about this. I have shared the link in the description. Please do watch the entire video of the volatility. You will have a better understanding about what is volatility and what is the thought process behind that. So how you can go and customize the stop loss by using the volatility level. So I'm sure that will really helpful when you come for trade. So let me quickly explain how we can go and interpret these number. So as I said, the R1 and the AS1. So these are the standard deviation 1, which means I can tell you at 68% of confident level, Nifty will be trading within this range. Likely like 17,624 to 18,337. That will be a 68% of chances Nifty is likely trade within that range. Again, remaining 32% of there is a chances Nifty might trade outside of the range, either upside or downside. So if in case if you do not want to take a chance, I would recommend you to go and opt for standard deviation 2. So which means 95% Nifty will trade within this range, like 17,278 to 18,704. The very few chances Nifty might trade outside of the range. If you want to initiate a very safe trade, if you want to initiate a short call, I would recommend you to go and initiate below this 17,270, because there is a very only few chances you might end it in loss, only 5% out of 100%. So again, 1,300 point within a 4 days, there will be a very little chances. So initially I would recommend you to go and opt for standard deviation 1. So if the prices reach that level, you can go and opt for standard deviation 2. So the total daily historical volatility for the next 4 days would be 1.98%. So this is this is the historical volatility for the Nifty for next 4 days in percentage. So I'm sure you will have a good understanding about that. If in case if you have any doubt, don't hesitate. Please leave your comment at the comment section. I'm glad to clear all your doubts. This week, we are using call ratio back spread option strategy. Last week, we used the put ratio back spread option strategy. For quite opposite, we are using this week. So what is the market view? So it doesn't matter. Market should move either upside or downside. We will be ended in booking profit. So all we need, market has to move. What happens if market goes bearish? Nothing. We will be booking a limited profit. If market goes bullish mode, we will be end up in unlimited profit. So that's the secret and interesting concept behind this option strategy. So this is actually a three-leg option strategy. We will be initiating two long call and one short call. So that two long call would be in OTM, I mean outside of the money, and short call would be in the money. Let me go and explain this in detail. So as we know, the last close of the Nifty is 17,853. The expiry would be 30 September, and the expected volatility, I mean the historical volatility, would be 1.98 percentage. Already I explained about these and I gave the volatility levels too. As I said, we will be initiating a two long call at the strike price of 17,950. So actually this is a OTM because our current close of the Nifty is 17,853. So we are opting for the strike price of 17,950. We are booking two quality, so that's a OTM. So we'll be paying the premium of 75 rupees 45 paise per quantity. So for two quantity, obviously it will be come to 150 rupees 90 paise. So our target day would be maximum of 4 days. So we'll be initiating a one short call at the level of 17,500. That's in the money. So we will be receiving the premium of 371 rupees 90 paise. The target price, the target day would be 4 days. So our net credit would be 221 rupees. When as soon as we initiate this option strategy, our MTM will be in positive in net credit of 221 rupees in premium. So that would be 11,050 rupees. So this is the minimum profit we will be booking. So what is the break even point? If for the low level 17,721 levels is a break even point. If Nifty comes below this level, we will be start booking the profit. If Nifty goes above this level of the 18,179, we will be start booking the profit. So when we will incur the loss, when Nifty closes between this level, we will be end up in the loss. So what would be our maximum loss we will incur by using this strategy? 229 rupees in premium, which means 11,450 rupees. This is the maximum loss we incur when Nifty close between these ranges. What is the minimum profit we will book? So as we know, by using the strategy, if market goes against our prediction, we will be stopped with the limited profit. So what would be the limited profit? That is the 221 rupees. So our market view is market. We are expecting market will go upside. So if market goes downside, this is the maximum profit we book at this level. So as soon as when Nifty breaches 17,721, we will start booking the profit. Once it reaches 17,500, this is the maximum profit we will book when Nifty goes against our prediction. What happened when Nifty goes as we predicted direction, our profit will start booking at the level of 18,179. Once the Nifty cross these level, we will be booking profit. So we will not stop with any levels as long as Nifty goes on the direction, we will be booking unlimited profit. So what would be our target prices? So when Nifty comes 18,300, we will exit. So we do not want to carry the position once Nifty come to 18,300. So when Nifty comes to 17,500, this is not 600, 500, we don't want to carry the position further. We will exit our trade and book the profit of minimum 11,450. So this is our the strategy which I used Nifty for this week. So you can also see the payoff chart of call ratio back spread. You can see, so this is a limited profit when Nifty goes against our prediction. So which means if Nifty comes breaches the level of 17,750, so we will start booking the profit. So this is the level 17,500. From this level, our profit will be fixed at the price of 11,000. If market moves as we predicted direction, so once it reaches a level 18,185, so we will start booking the profit. So as long as market goes, our profit will increase. So that's the reason I said unlimited profit when Nifty works as we predicted way. So I hope you had a good understanding about this. This is what I wanted to convey you. So if you would have any doubt, don't hesitate. Please leave your comment in the comment section. I'm very glad to clear all your doubts. So let us see how Nifty is performed this week. This is all I wanted to tell you now. So if you have any feedback or suggestion, please leave your comment in the comment section. If you like this video, don't forget to click the thumbs up button. Don't forget to subscribe this channel. Again, we will meet on the another session. Till then, bye from Shiva Gurunathan. Thank you.